We need to step back, find a solution, take some of the emotion and momentum out of the equation and do what's right for the industry so that we understand what rules we're playing by. So no pun intended, but clarity is very well named, and I think their job is to provide that and would like to see that.
Welcome back to 701 Chain, Fintech for Financial Institutions. I'm Michael Lehn, alongside my co-host, Devin Smith. Today, we're diving into June's Fintech Recap. Let's get started.
We hold these monthly updates with the intention to bring our listeners all the major news in the fintech industry. As part of B&D's model of supporting 91 individual financial institutions in North Dakota, we felt it would be important to bring in Craig Hanson, Chief Banking Officer at B&D, to shed light on all the other traditional finance headlines affecting our communities today. Welcome, Craig.
Thank you, Devin and Michael. Appreciate you having me on 701 Chain. I'm excited to bring some TradFi context to our North Dakota financial institutions. Bank of North Dakota serves as the nation's only bank owned by a state and uniquely supports North Dakota's banking ecosystem through being risk managers, liquidity providers, an economic development catalyst, and to generate a return for our state.
Well, that said, let's get into it. So the first fintech topic I have for this month is the FDIC has issued their notice of proposed rulemaking for the Genius Act. One of the big key takeaways that I have for this is that they have PPSIs, or permitted payment stablecoin issuers, could have up to 40% of their reserves at any one financial institution. That to me is a huge risk on the issuers in the event that there's a liquidity crisis for that financial institution. You cannot rehypothecate these deposits. They have to be in their liquid form, whether that's treasuries or cash, right? If there's a run on that bank for any other reason, that's a risk for those stablecoins, right? So this is the same thing that happened with SVB, right? SVB had one major depositor that was over the FDIC insurance. So then the government came in and they called it a systemic risk exemption that they gave to SVB, where there was about $16.7 billion that the FDIC ended up having to front to cover that one depositor because SVB went under. So the last real point about this is not an issue or a risk for people that want to have stablecoins. This is a risk for the stablecoin issuers themselves. This is just a notice of proposed rulemaking. There's been a lot of watchdog consultants out there that have brought this up. So I do feel like this is going to change before the actual rules come out.
Interesting. You know, knowing that the large issuers right now are only working with a handful of banks, this could potentially be more problematic for them.
Exactly. And what could really happen, though, is that if they turn that 40% down to 20 or 10, right? Well, what you have there is you have more money now going back into smaller financial institutions. And that's a win from our perspective.
Absolutely.
Yeah, I think that's really interesting, too, as we've had conversations and continue to visit with our North Dakota financial institutions and their interests in, say, the Rough Rider stablecoin.
Right.
There's a lot of dialogue and desire to gain understanding around what that looks like. And I think anytime you're talking about bringing back deposits into our community financial institutions, which is uniquely positioned for our state, that's a good thing.
Yeah.
You look at our state as a whole, I think we have a lot of wealth advisors, wealth managers, and this kind of ties into one of our large updates here is Coinbase made the news in June that they went ahead with an AI-based wealth advisory service that would fall under the SEC oversight, just like a human advisor. So in simple terms, these tools would have to follow the same rules around guidance, disclosures, and protecting investors. The key point is that regulators are treating these AI agents as actual financial advice now, not just a tech experiment or just for kind of guidance. It's a sign that the digital automated guidance is quickly becoming a normal part of investing and actually leaning into these AI agents for true sound financial advice.
Yeah, we've seen regulator after regulator on a national level say you need to lean into AI as an industry or as institutions. And I think this just kind of goes hand in hand with that. You need to lean into AI. I just think the flip side is always going to be, the accountability. So, you have the FINRAs out there that do the licensing, right? And you can hold individual firms accountable. you can't truly hold an AI accountable. So
yeah, I think that's interesting. I'm a trust but verify,
yeah,
right? And so, candidly, do these have to prove some competency equal to or equivalent to a Series 6, Series 7?
Yeah.
It's going to be real interesting and fascinating to see how that plays out. I think not being able to sit down and have a conversation with your advisor and talk things through, or it's going to be an interesting, I'm all for it. Interesting to see, but trust but verify.
Yeah, absolutely. It's great. You want to hit us with something going on in the TradFi world?
Well, I think first I need to take a liberty here and just say we're coming off of our farm financial stability program that's been really taking up and occupying the time of not just internal BND staff, but also our North Dakota financial institutions and their borrowers. And so just taking a moment to say thank you to that group of our North Dakota FIs, our internal BND team. We processed over 600 applications for $500 million, our largest farm stability program in the bank's history. So pretty remarkable effort. We had a broad utilization, geographically dispersed throughout the state. So you can tell that it's not just one area or one segment that was impacted. This was across the board, and we saw it regionally throughout our state. So wanted to first start with that as our my first update.
Yeah,
so
absolutely.
Thank you to all involved at the NDFIs as well as our BND staff. They did a great job.
Yeah, no, and I think that's what we want to convey to everybody out there when talking about BND and fintech is there's so much more that we do than fintech. I mean, this is a small sliver, and there's so many awesome, amazing things that BND does through traditional finance channels that we want to make sure it gets highlighted as we go through our fintech journey together.
And Craig, you touched on it a little bit, but can you just take additional 30 seconds to describe who Bank of North Dakota is and the correspondent services that we provide?
Yeah, I think thanks for that question, the opportunity to talk through that. I think first and foremost, at the beginning, we talked about what we do and who we are, but primarily our reach through as a correspondent bank, right, of working with our North Dakota financial institutions for through bank participations, offering various economic development programs that we bring on board to align with the state initiatives, understanding what's happening in terms of evolution in the ag industry, or even what we're seeing for our rural communities where the economic developers there have local needs, and we BND partners to align there, all through utilizing the North Dakota Financial Institution Network. Without our North Dakota FIs, without their ability to partner with Bank of North Dakota, we would not be able to deliver not one program, not one loan. So it truly is a win-win situation.
It's a good recap and kind of ties into Rough Rider, right? We don't compete with our FIs, we partner with them. And that's exactly what we're doing with Rough Rider. We're providing that infrastructure to our FIs to allow them to be more competitive and to allow them to provide better services.
That's exactly right, Michael. I think that's really good insight. Fits right to the mission and fills a gap that we've seen at the bank level to enhance, continue to partner with, and continue to evolve our North Dakota banking relationships, but also providing our North Dakota financial institutions with the opportunity to have a across-the-board solution for their customers.
Yeah, no, absolutely. Going back to our recaps, the Clarity Act, I feel like we're going to be able to have just a monthly standing update on the Clarity Act because it's taking so long for it to get through. It made it out of committee in the Senate Finance Committee. There are still 7 Dems that need to cross party lines to get to that 60 vote threshold for it to be to get out of the Senate and then be signed by the president. There were talks in early June, but they kind of fell apart, and most of it's falling apart based on there's ethics issues. Dems very much want to have extra stringent controls on the ethics right now, whereas the Republicans maybe feel like it's a little heavy-handed. Industry insiders have indicated that a failure to advance the legislation before Congress leaves in August means that we won't have market structure for potentially years, given the outlook of November's election cycle.
In June, we've seen the probability via Polymarket go as high as about 65%. Yep. And now I think it's hovering right around 45-ish.
Right. Yeah. 40, 48. Yeah. Yeah. So it's something that doesn't look super promising right now. But I think as an industry, as a banking industry, we want the Clarity Act. The crypto industry wants the Clarity Act. So it behoove all of us for Congress to do the right thing at this point and get this passed and let us move forward from there.
Yeah. I'll add in, I think we need to step back, find a solution, take some of the emotion and momentum out of the equation and do what's right for the industry so that we understand what rules we're playing by.
Right.
So that we have the ability to make business decisions operating our financial institutions, banks and credit unions. So no pun intended, but clarity is very well named. And I think their job is to provide that and would like to see that.
Yep.
It's tough to have, or I should say it's almost impossible to have a monthly recap in 2026 and not talk about stablecoins. So just real quick, MasterCard is now live with their stablecoin settlement. So it finally catches up to Visa. And this will be implemented across their entire network and be a true live development now throughout it actually went live a few weeks ago. And now, again, just knowing that they compete against Visa, it's nice to see that now both MasterCard and Visa offering that. And then I think throughout the community banking space, everyone's kind of familiar with Zelle. And Zelle is preparing to launch ZLUSD, which is their stablecoin. So that will be utilized for remittances and cross-border payments.
I think it's really interesting that you have this fork in the road where you have these big players like MasterCard and Visa, right? Where they can do one of two things. They can stand in the way and they can lobby and they can force legislators to move to protect themselves, or you can innovate. And I do think it says something about MasterCard and Visa that they chose to innovate instead of, lobby and stand in the way and get what they want that way. So, I mean, credit to both of them for leaning into it.
Leveraging the technology of the stablecoin to provide an additional payment rail.
Yeah.
Right. An additional way to move money.
Yep. Absolutely. You got anything else, Craig?
I think maybe for me, good update for June, as I've been out having several opportunities to meet with financial institution personnel, is the importance of the relationship. And so if I'm a banker at a credit union or a financial institution, or I'm relationship based on the market side, or I'm a customer, I think as we go into these economic times where rates are up, rates are down, spreads are shrinking, pressure on margins across the board, it's a complex time to be in banking, but also be running a business, be trying to do the right thing for not only your business, but your employees and your staff. The importance of the relationship, having a good community banker on your side to work through the trials, tribulations, run through, bounce ideas off of, is more important now than ever. And I think knowing that and taking that to the step is focused on bringing in not only your loan relationship, because as financial institutions, we want to continue to grow, provide loans, but I think it's important to understand the holistic relationship, and that's the deposits, the insurance, the trust and wealth management services. I think that is something that we're seeing continue to grow, evolve, and as our financial institutions become well-rounded resources. That has really been a big tone and tenor for how our FIs are navigating these uncertain economic times, but also helping their borrowers work through these uncertain times too.
No, absolutely. That relationship's always going to matter. So that's our time. Thanks for listening to our June monthly FinTech Recap. A big thank you to Craig Hanson for joining us. We'll see you next month on 701 Chain.
This recording is for informational purposes only. It does not constitute legal, financial, or investment advice.
The views expressed are those of the hosts and guests and do not represent any organization, including Bank of North Dakota. Please seek professional guidance before making financial decisions.